Trust you all can hear me. Good evening. Welcome to day two of Trade with Critovers. Basically, at Critovers, we are looking at creating wealth nations. And creating wealth nations basically will equipping people with the right knowledge and skill for them to make money in the financial market. And that's why we have organized these 5 days intensive forex training boot camp to equip us with one of the money making skills in the current generation, one of the money making skills in the current economy that we are in. As we all know that we are in a digital economy, if a business is not around technology now, you are missing out. And if you've not started looking at how you can generate alternative source of income with the current situation of the economy, we projection for 2023 is looking as though it's going to be a contrasting economy, meaning it might be a recession economy this year because growth rates projected for this year compared to 2023 is lower, meaning there will not be much activities in terms of growth economically and looking at other happenings around the world. So you need to be looking at alternative source of income. Inflation is on the increase. What are the things that happens when inflation is increasing? We know that yes, the value of the money we have in our hands it's reduced, and we don't really have enough purchasing power to buy more goods. We don't really have enough purchasing power to buy more goods. So basically, as Critovers, we are looking at raising generations and equipping them to build wealth nations globally through financial education and financial skills. And the 5 day boot camp basically covers forex overview and terminologies, forex analysis, technical analysis, market structure. That's the three is technical analysis, understanding market structure. Therefore, we'll be looking at trading psychology, risk and money management. As we know that in this business of forex trading, you need to know how to manage your money and resources very well. If you have the proper risk management and the right money management, you will last long in this business. You will last long in this business. And day five, we'll be looking at introduction to synthetic indices trading and getting access to funding. As a professional trader, you need to look for how you can actually seek investors and how you can actually get funding. Once you are gain mastery, but you need to get to that level of gaining mastery before you start looking at how to get access to funding. Yes, so that is why we have put together this class to see and equip people with the prerequisite knowledge of going into forex trading. And as we know, yesterday when we ended at what patience is key to a profitable trade. And yesterday when we were discussing about the forex overview, we mentioned that it's a big market. Over $7 trillion passes through the market daily. Over $7 trillion passes through the market daily, and we also discussed about just an overview of what passes through the market. We also discuss what are the things we trade in the market. We said, well, we trade currencies in the market, we trade commodities, we trade stocks, we trade indices, and we also looked at who are the participants in the market. We discussed that yes, the central banks, the commercial banks, the investment banks, those are the participants in the forex market. And we also mentioned what are the other ways to trade forex. We also discussed ways to trade forex, talking about the market analysis, technical, sentimental, and fundamental analysis. And remember, we said what technical analysis is the study of historic price movements in order to identify patterns to help us determine whether you are buying or you are selling in a financial market. And we also said what fundamental analysis is a study of the effects of political, social, economic, or environmental conditions of a country that affects the forces of what demand and supply of that country. And in turn, when there is an happenings or occurrences affecting the economy, it also affects the currency pairs. It also affects the currency pairs. It affects the commodities. It affects the stocks market. It affects those things that we are trading in the forex industry. And we also look at what sentimental analysis, which also talked about individual opinions of the market. That's what we said about sentimental analysis, and we just use this word not really to place trade but to just get opinion in the market. And we also discussed about who are the types of traders. We said there are day traders, there are swing traders, there are position traders. So I'm just running through this overview so that for those that missed yesterday's class, they can actually at least catch up before they go back and rewatch the first video. And also we discussed about what the best time of trading forex. We discussed about what the London session and the New York session, and we said these are the best time to trade forex, and the overlap between the London session and the New York session has the highest trading volume. That's when the market is more volatile. And we also discussed that during the week the market liquidities varies during the week between Mondays to Friday, as we know that the forex market runs 24 hours daily, 5 days a week. And in as much as the market runs 24 hours daily and 5 days a week, we need to know what time is the best time for us to come to the market. We don't just come to the market every day or any time of the day. The best time when we know that yes, there will be volatility in the market and we make money. And we also mentioned that the midweek, which is Tuesday, Wednesday, Thursday, they are the best time to trade forex because there is higher trading activities. People have understood happenings for that week, and they can actually take positions. And the Wednesday has the highest trading volume, Wednesday, which is the mid of the week. Advantages of trading forex is, so we discussed that also yesterday, talking about the high liquidity, high leverage, low capital requirements, profits from any market condition. Either price is going up or price is coming down, you are making money from the market. And low risk to manipulations, around the clock trading. And we also said some of the myths and truths about forex. That forex is not scam. You can be rich overnight with forex. Even as much as you can be rich overnight with forex, you need to take proper risk management serious. Just the way you can be rich overnight, it can also send one to his village overnight. So that's why the knowledge is important. And you don't need to be glued to your system 24/7. Yes, you don't need to be glued to your system 24/7. And we also mentioned that the forex market actually opens 10 p.m. on Friday night and closes 10 p.m. Opens 10 p.m. on Sunday night and closes 10 p.m. on Friday night. Those are the time when the forex market opens. But because of daylight savings now, market opens 11 p.m. on Sunday. So from that time, the market is active. And we also discussed about brokers, that in trading, you need to have an account with a broker, and it is crucial that we choose the right broker to trade with as a new trader. Basically, what the broker help you to do is you need a trading account with them to be able to trade. As we said, that the currencies and commodities that we are trading here, they are electronic instruments, they are not physical. And because they are electronic instruments, they are called over-the-counter instruments, because they are in electronic form. So that's why you need a broker to trade these currencies and commodities. And a broker is actually providing you with this avenue. Open a trading account, deposit your money, and you can start trading. And for you to know a good trader, we said there should be a legally incorporated company behind the company that is trading the broker. So basically, as Christophers, we are looking at okay, sorry, my network. Yeah, so we said what behind every broker we are seeing, there should be a legally incorporated company behind it. Yeah, so from their site, you'll be able to see that there is a legal company behind it, and there should be an address, not just an online address, but there should be a physical office address, even though it's not located in your country, but you should be able to trace them to a physical location. And also, we mentioned that what the brokers must be licensed and regulated. Brokers, they must be licensed and regulated. The various bodies regulate the brokers so that they will guide against manipulations and financial risk and fraud. That's the reason why they are being licensed and regulated. So we need to be sure that yes, we are trading with a licensed and regulated broker. Because one of the reasons why sometimes people deposit money on a broker, and at the end of the day, they are unable to withdraw their funds because they did not look out to check some of these background informations about these brokers. You need to look at you being able to withdraw your money as at when due, and also you look out for spread, you look out for a lot of things like spread, but these are the basic things that you need to watch out for so that at least you can actually deposit your money and withdraw your money easily. Yes, and we also spoke about currency pairs. Currency pairs that we trade, they are actually what listed in pairs. Currency pairs, either euro, pounds, they are in pairs, euro USD, GBP USD. So they are always in pairs. And we said what the first two means the what stands for the country, while the last starts for the currency. So when you see euro, euro means EU is what? Euro. Then as in okay, EUSD. USD is what? US is the country, while the D there is the dollar. US is the country and the D there is the dollar. So basically that's how that is. And we also talked about what base currency and quote currency. And we said the base currency, this quote currency is used to buy the base currency. And we also talked about bid price and ask price. And we said the bid price is the price at which the broker is willing to buy the currency in exchange for the quote currency, which is also the price at which traders sell to the broker. I also said what the ask price is the price at which the broker is willing to sell the base currency in exchange for the quote currency, which is also the price at which the trader is buying from the broker. And after which we'll all discuss about major currency pairs, minor currency pairs, and exotic pairs. And we said the major currency pairs are the pairs that has what USD with them. Any pair that is quoted together with USD, they are the major currency pairs. As yes, so we also said there are crosses or minor currency pairs, and the minor currency pair or crosses, they are currency pairs that do not have USD quoted together with them. So those example of those ones are Euro CHF, Euro card, GBP CHF, all those currency pairs that we see without USD are minor currency pairs, and we have some exotic pairs also. These are pairs that are quoted together with currencies in the emerging markets or developing countries such as Brazil, Mexico, Chile, Turkey, Hungary, and South Africa. You must have heard of USD ZAR, is a South African rand. So USD BRL, USD, these are the exotic pairs. I'm just running through for those that didn't come yesterday, but go back to the YouTube channel so that you can look at the recorded session and replay them. It will help you. And we looked at some terminologies also yesterday. We looked at what is PEEP. PEEP is what percentage in profits. We looked at lot size and what is the dollar value of each of the lot size. A standard lot size we said is what $10. A mini lot size is $1. A micro lot size is 10 cents. A nano lot size is 1 cent. We also talked about spread, which is the difference between the bid price and the ask price. We also said what when you say long, it means buy. Yes, meaning we are anticipating that the currency will appreciate, so we are buying. Then when we say short, when we say we are shorting a currency pair, meaning we are selling that currency pair, and we were what anticipating that the currency will sell. And we also talked about some major things that we see on our MT4 platform or our trading platform. We talked about the balance, equity, floating profit, leverage, margin, free margin, margin level. So those are the things that were discussed during day one. So now we move straightly into day two. Move straightly into day two, where we'll be discussing basically about fundamental analysis. We'll be talking about fundamental analysis. Remember, patience is key to a profitable trade. We need to be very much patient in trading, and also have it in mind that you're not making the whole money that day. In as much as we work somewhere, or as a student, or as a worker, you wait for what 30 days before you get paid your salary. So why the rush? Why are you trying to make the whole money at once in the market that same day? So you need to what small profits every day leads to massive results down the road. In as much as you can wait for the end of the month to get paid your salary, you need to be patient enough to what keep accumulating your profits every day in the market until the end of the week, and you make your withdrawals. I always advise people to withdraw money once they make profit. Okay, this is also a quote from yesterday. Formal education will make you a living, self education will make you a fortune. Yes. So we are here. We already said some of these yesterday. So we go straight to fundamental analysis. Yes. And basically, fundamental analysis is a way of studying and predicting the value of a currency by analyzing the country's political, social, economic, environmental, natural conditions that may affect the supply and demand of that country. The currency of a country will always appreciate in value when the economy looks optimistic. As you can see for the diagram here, when the economy is good, the value of the currency appreciates. Once our economy is okay, dollar to naira to dollar, you see that there will be a drop in price of the conversion rate. Yes, there will be a drop in price. So once the economy is bad, we see the what? There will be a depreciation, a loss in the value of that currency. And when there is a loss in value of that currency, the exchange rate will what? Increase. That's when you see that because of the loss in value of our currency and as a result of bad economy, the dollar to naira exchange rate is high compared to last year. And when we are looking at fundamental analysis, what are the key economic indicators that affect the currency exchange, that affect the price of a currency? Anything can affect the price of a currency. Interest rate is one of those things. Inflation rate is one of those things that affect the price of a currency. Gross domestic profit, GDP, is one of those things that affect the price. Retail sales is one of those things. Industrial production is one of those economic conditions. Consumer price index, unemployment rate, geopolitical tension, when there is war, when there is crisis, just like the Ukrainian war between Russia and Ukraine. When there was crisis, a lot of things happened in their economy. Yes, so those are the things that happens in the economy. Natural disaster, when there is flood in a particular area, when there is flood in a particular country, when there is flood in just the way we had flood issue in Nigeria around Kogi and Bayelsa. Farmers could not transport farm produce down to the west, and that affected um, basically the cost of consumable goods in the west because food were not coming from the north, and also it affected what the price of fuel in the north because they could not transport oil easily from the south down to the north. So this is just within Nigeria. So now let's look at it globally. When there's a natural disaster in these major countries, it affects the currency of those countries. Yes, when there was Brexit, it was affecting pounds. So a lot of them. So we need to understand what are the things that affect these economic indicators that affect various currencies. Because with the right understanding of this fundamental analysis, coupled with a good understanding of technical analysis and market structure, we will be fine trading forex. It's nothing stands alone. Is a combination of all this knowledge that makes you a good forex trader. A combination of all this knowledge makes you a good forex trader. So economic indicator, when we look at interest rates, high interest rates attract what? Foreign investments, which increase the demand of that currency, and what? It drives up value. So once the interest rate of a country is good or is high, it makes people to what? Take their money to the bank, or investors bring their money to the country. And what? Once there is investors are bringing down their money to the country, it drives up the value because what? There is increase in demand of that currency. And so also same thing happens when the interest rate is poor, when there is no really much thing happening in the economy and is affecting the interest rate of that economy. We also see a drop in interest rates, and what? People take out their funds from the bank, or they pull out from various investments in that country. It affects the price of the currency of that country. And one of the other indicator is what? Inflation rate. This has to do with what? Reduction in the purchasing power of money. When you hear inflation rates, meaning the what's your money that you are holding, what it can buy, it's what is lower. Assuming you could buy a 5 bottle of Coke with 100 naira, for instance, when there is inflation, your 100 naira can only buy 3 bottles of Coke, meaning your purchasing power has reduced. So when there is an increase in inflation rate, it drives down the purchasing power of money of that country. And what? High inflation weakens the country's currency relative to other currencies. So when there is high inflation, it weakens that country's currency. So assuming you are trading Euro USD, for example, or GBP USD, and there is an inflation affecting the US economy, meaning what? The US dollar is going to be what? Weakened based on the high inflation rate that is affecting the US economy. We are going to get to that, how we can actually what? Understand and interpret some of this news when we see them. We will get to that one so that we'll be able to what? Interpret. But let's understand what each of these economic indicators is addressing first. So when we talk about gross domestic profit, which is GDP, GDP is what? Is actually what? The total market value of the finished goods and services produced in a country over a specific period of time. Yes, so the goods produced in the service in the manufacturing industry, in total finished goods produced over a specific period of time, is what is captured under the GDP. And high GDP serves as evidence of what? Growth in the economy. So when the GDP of a country increases month on month, or year in, year out, or quarter by quarter, depending on the period which is being reviewed, the higher rates serve as what? Good growth in the economy, and increases the demand and value of that currency. Once the GDP of the country is good, it increases the demand for the currency, and it drives up the value of that currency. And we're also looking at retail sales as an indicator. Retail sales as an indicator estimates or measure the total sales of retail goods over a period of time. So basically, the retail sales, what is happening in the market, what people are selling in the market, basically, those are the retail sales. When we measure this over a period of time, we also take statistics and see, is this good number good enough? So strong growth in retail sales signifies that what? Consumers have what? Extra income. For consumers have what? Extra income to buy what? Goods and services, which therefore will have a positive effect on the value of the currency. You see that everything we are discussing about is related. When consumers have what? Extra income to purchase goods in the market, it affects what? The value of the currency. Meaning inflation rate is low, purchasing power is more because the inflation rate is low. It helps citizens to have what? Extra income to buy some other goods that are not a necessity. So they buy retail goods and they have spare what? Income that they can play around with. Yes. We also look at what? Industrial production as a key indicator of the economy. Industrial production has to do with measure of what? The total value of output produced by manufacturers, miners, and utility sector of the economy. So when you look at a news talking about industrial production, meaning that news is addressing or measuring the total output of goods produced by manufacturers in the production sector, mines, and what utility sector of the economy, which is just a part of the GDP. So an increased output is a good sign that yes, the economy is good. When the industrial production news comes out or the report comes out and we see that yes, it's higher compared to the previous month, it means what? The economy is good, the economy is thriving, people are making productions, everything is going on well. So meaning what? The value of that currency will also increase and appreciate because what? There is production going on in the economy, and which also affects some other areas of the economy. Moving on, we also always hear what? CPI. CPI has to do with consumer price index. CPI is consumer price index. And what is consumer price index measuring? Consumer price index is measuring consumer price index is tracks what? The change in retail price of essential goods and services consumed by households. So CPI is what? Consumer price index, and it basically what? Track the change in retail price. The price of what I bought last month and this month, has it increased or has it decreased? Do you understand? Has it increased or has it decreased? Price of yam in the market last year and now, is it the same thing? Price of my bottled water last year and now, is it the same thing? So most of these things are measured and they are indicators of the economy. Most of us always wait for Wednesdays and Tuesdays, or at least in a week, we always wait for CPI news to come out so that we can actually what? Make money in the market. So what? When you understand what CPI means, when you see the result of CPI news, you will be able to predict which direction the market is going, and you'll be able to what? Take a position and make money from the market. So it's with this understanding that you're able to see news and trade and make money from it. That's just how it works. So this can lead to changes in monetary policies by central bank that may affect the currency either positively or negatively. When the change in retail price of goods is high or low, central bank of the country make changes that will affect the currency either positively or negatively. It all depends. So once that news comes out and it's positive or negative, it helps you to take a position in the market. And also unemployment rates, this also comes out together when um together most especially when there is NFP, non-farm payroll. Also yes, unemployment rate also comes out that day. So it's this measures what? The number of unemployed people as a percentage of the labor force. Unemployment rate measures the number of unemployed. Yes, so unemployment rate measures the number of unemployed people as a percentage of the labor force. High unemployment rates indicates the economy is operating below full capacity and is inefficient. When the unemployment rate is high, it means that the economy is operating below its full capacity. And this will lead to what? Low output and income. And in return, it will what? Depreciate the currency value. I mean, we don't really have enough for a lot of people working. So it will also lower what? Output and also what? Income of the citizens. It will affect the price of this currency, various currencies in the market. And then we also look at key indicators like geopolitical tension, such as what? War or politics, they have adverse effects on tradable goods by changing the supply and demand of certain commodities. When there is war, it affects price of the currencies, and it also affects some commodities such as gold, grains, and all. During COVID, the price of oil dropped drastically because what there was no production as such before it recovered also. And during the war also, the price of oil also increased because these are some of the things that affect um price, and it affects price of also various currencies. Natural disasters such as what earthquakes, flood, and pandemic, among others, can also cause massive disruption to the economic activities. So when these things happen, it affects the currency, it affects the price of currency and price of commodities. Remember that in forex, either when these news affect the market either positively or negatively, it doesn't affect your trade because either way you are still making money from the market. But now you need to understand all these indicators and understand the interpretations. When you understand all the indicators and interpretations, you'll be able to take a favorable position in the market, either a buy or a sell. Because we know that in forex trading, either you are buying or you are selling, you are making money. It now depends on the direction that you are in, whether it's in your favor or it's against you. So no matter what is happening in the economy, that's one of the reasons why forex skill is a very sweet and is a very important skill to have, because either the market economy is good or the economy is bad, you will still make money. Now it's just for you to have what the right knowledge so that you can actually what take advantage of whatever is happening and make money from the market. Okay, this is basically sentimental analysis. So these are some of the basic indicators in the market. So we'll go to Forex Factory because that's one of the places where we see our news every day, 5 times a week. There are other places, but for us, as for the purpose of this boot camp, we'll just be looking at Forex Factory, and we're going to look at those news and we look at the interpretation, how we can interpret such news when we see them. Let me share that so that we can see. Okay, this is forexfactory.com. This is forexfactory.com. So once you come here, once you come to forexfactory.com, one, you want to be sure that your date and time is correct. So that you don't, because once if your date and time is not correct, you'll be seeing the news that the news is coming out 3 o'clock, whereas the news is coming out 1 o'clock. So you need to be sure that yes, your time and date is correct. That's first thing when you come to Forex Factory. Yes, daily, always confirm that your time is always on your top right corner. So you can always look at that. And then when you come daily, okay, this for this. Okay, when you come to the market or on a Sunday, you just need to come and you click on the date. Today, let's just take for the week. This week, on a Monday, you just select your week. So this Sunday is going to give you the week 15 to 21. So an overview of what is happening for the week on Monday. These are the news that was available. You can see there are various folders. There is yellow, there is red, there is orange, there is ash. So now I hope we have our pen and paper because these are other key points that we need to understand when we are seeing these folders. These folders tells us what the impact of that news will be. We have talked about the indicators, consumer price index, inflation rate, all those things. We have talked about them. All those indicators that we have spoken about are mostly categorized under various folders, that you are seeing here. And the folders have interpretations. So now you can see a red folder. So red folder means what? Is an high impact news. Red folder, when you see forex, when it comes to forex fashion, you see a red folder, meaning what? Is an high impact news. Orange folder is what? Medium impact. Orange folder is medium impact. Yellow folder is low impact. So meaning the news coming out for that day is a low impact news. It will not really have much volatility in the market for that day. It's low impact news. Then what? The ash folder is what? No impact. No. 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 No impact for that day. So we have the red folder, we have the orange folder, we have the yellow folder, we have the ash folder. And we said what? Red folder is high impact news. Orange folder is medium impact news. And we say yellow folder is low impact news. And the ash folder is no, no impact. So the news for the week, as you can see, US bank holiday is ash. So it won't affect the economy at all because it's a no impact news for that. It's a no impact news for that day. So there will not be, it won't affect the market as such. Then we can see the red impact news is GDP. Okay, let's look at Tuesday. Tuesday says GBP for China. This is China economy, CNY. That's China economy. So for those of us that trade currencies related to the China economy, as you can see, we can see GDP, we can see retail sales, we can see unemployment rate. Remember, we've discussed all these indicators. So when you come here and you are seeing them, you understand, okay, these are the implications. This is what this news is measuring. When it is good, it will affect the economy in a certain way. When it is bad, it will affect the economy in a certain way. So we already know more. And I always want us to focus on the red and the orange because they are the what? High impact, especially the high impact. We always see that CPI is always high impact. That's why when the news comes out, you will see a sharp movement in the currency price. Take a look at CPI news that came out on Tuesday. That is for the Canadian economy. So when you see CPI for Canadian economy, you want to trade news, you always trade what? Any currency pair that has to do with what? Card, AUD card, USD card. Those are the currencies that will be affected. So any currency that has card to it will be affected when this news comes out. Later in that day, on Tuesday, which is today, we also had the manufacturing index news that came out, and it's what is affecting it is what? USD. So basically, from the top of the forex factory, you can see what? Date is the first column, time is the next column. So we have looked at, we remember we set our calendar to what? For this week, date Sunday, And remember, after the impact folders, it also states the economic indicators. And we look at it here, it tells us what the details of those indicators. And what we look at, what the actual. Actual is the result of the news for that day, the report for that day, once the news comes out. And we have what forecast, and we have what previous. So there's a previous. So when the news hasn't come out, you will not see. Okay, let's look at Wednesday, for example, January 18, 2023. Um, this for tomorrow, we can see the time, we can see the currency that will be affected, we can see if it's high impact or low impact, we can see the details of the indicators, and we can see what so forecast is what various bodies, various institutional traders are forecasting based on their report of what will happen. And there's a previous column that is showing us what the previous result of that economic indicator was when the report last came out. So most time we compare the previous and the forecast. Once we see the previous and the forecast, then we now wait for the actual to come out. Actual, the actual is this. This is where the actual will come out. So once the actual come out, we now know okay what to do as regards that currency pair. And the same tomorrow by 2:30 USD pair, there will be what CPI news, as you can see for tomorrow. So CPI news is coming out tomorrow. We'll just wait for the news to come out, and let's see what will happen. So in understanding this, you come to the if you take a look at this folder in front of each of them, CPI news, let's take a look. There's a folder there. And when you click on that folder, it will give you a detailed information. It will give you a detailed information of what is going to happen or what that news is talking about. And it says what? Actual greater than the forecast is good for the currency. So now, for CPI news, a forecast is out that we are expecting a 0.1% change. And remember, we already stated also that we know what CPI news is measuring. It's measuring the change in price of finished goods and services sold by producers, excluding what food and energy. And we said what okay, this is the December actual 0.4 actual, and he said what the effect is here, usual effect. Usual effect is what actual greater than forecast is good for the currency. There is a forecast for tomorrow saying what 0.1, previous figure was 0.4. So now for tomorrow for CPI news, this is what we are expecting by 2:30. Once the actual comes out and the actual is greater than 0.1, meaning USD price will go up. And remember, once USD price goes up, every currency pair that is what USD XXX, either USD CAD USD CHF, anything that starts with USD card, USD XXS, anything USD dash will what? Will buy. And anything that is dash 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 XXX USD, GBP USD, Euro USD, any AUD USD, anything USD will sell. Exactly. That's basically what will happen tomorrow. And peradventure, the report comes out and it's negative. If the report comes out and is negative, meaning the actual is less than the forecast. Assuming tomorrow the price came at 0.05 or 0.00 or negative, because sometimes it can be a negative figure, and it came as minus 0.1 or minus 0.2, meaning the US currency for that moment will be weakened. And remember, the impact of the news is always within an hour. Once the news, once it's more than 1 hour, there's no point of you coming back to trade it. Most of the time, it's always instant. But you will see the effect for like an hour. After that, just forget about it. But it's always good we are in the market and take it immediately the report comes out. So if the report comes out negative, meaning USD pairs, it will affect USD pairs, but USD XXX, one, if it's negative, DXY will drop because DXY is measuring the US economy. DXY will drop. Once DXY drops, USD XXS, USD card, USD CHF, any currency code that starts with USD, you sell it. Then any currency that is GBP USD, XAU USD, Euro USD, AUD USD, anything XXX USD, you buy. That's basically the layman's interpretation or illustration that I know that you can easily understand. So basically, that's what we always look out for when there is news, especially for the red folders because they are what? High impact. And remember, what is coming out tomorrow, retail sales is coming out, PPI is coming out. They are coming out the same time. So their result will determine what will happen in the market. The same thing will go for this week. Okay, I think for this week, tomorrow we have the USD that is high impact. Later in the day, we still have USD news, but they are all yellow folders. So it's low impact. So we might not really focus on that because they are what? Low impact. Then on Thursday, we have medium impact news for AUD pairs. So for those of us that trade AUD, unemployment rate will come out. So if it's positive, AUD, USD, AUD, XXS, you buy. If it's negative, XXX, if it's negative, AUD, XXS, you sell. So that's basically it. That's basically how to trade the news. And we look at how we can take examples after this, and we also put some, at least for tomorrow, when which there's a news coming out, so we look at how we can actually do that and put some setup and the impact. We always it's always good, you if you don't want to trade it, just observe by the side. Yes, most times it's good to observe because sometimes it can spike both ways. Like last week, it spiked both ways, and then it took lots of people out. And for news, most time it's always good you reduce the balance in your account so that you know that you are trading with something you can afford to lose sometimes. So Thursday we look at no high impact news, but so by 2:30 again, there is manufacturing index report coming out. Is a medium impact news because it's what orange. Then we look at okay, FOMC news will come out. Members Ben and speak. Okay, 7:15 FOMC will come out. Then on Friday, which is the end of the week, we have there's no high impact news, but we have medium impact news for GBP. Retail sales report is coming out for CHF. Okay, their central bank is their chairman for that is speaking. Then Euro, president of large banks. For those that trade card, core retail sales is coming out for the Canadian government, also for the Canadian economy. So it will affect card. So that's basically what we look at on a weekly basis or anytime we want to trade news. Basically, that's what we look at when we are trading news. When we are trading news, that's what we look at um, under fundamental analysis. That's basically what we look at. And I think with this brings us to the end of day two bootcamp. Thank you all for your time. Thank you all for creating out time to up on this call. And I hope we have learned a lot on this call. I hope we have learned a lot on this call. So basically, the recorded session will also be shared as usual. We can always come back to it and listen to it again because you might not have gotten all that has been said at once. Um, you might come back and just take a replay so I can get value. And like I said, all this information is what we take when and consider when we are trading. You don't just look at one thing when you are trading. You look at the technical analysis, you look at the fundamentals so that you don't get carried away, not knowing that okay, if you are trading or you are in a trade currently, you also need to take a look at the news. And if you are on a position on a side that's against where the news is going to, is that you close your position at that point, take your profits, and stay by the side and watch what the market does. Yes. So thank you. We'll share this recorded session. You can come back and replay. And tomorrow, don't miss tomorrow. Take out time. Invite your friends. Let them register. Let them join the platform. Tomorrow, we'll be looking at another important value, technical analysis, and we are going to look at market structure, especially because once you understand market structure, that's another information you need to understand. That's another thing you need to understand market structure. With that, coupled with a good fundamental analysis basics, you'll be able to look at the market and take a good position. And also, we yesterday we dropped the link for the recommended brokers that we know that they are licensed, are regulated, and they don't really manipulate trades. We dropped on the platform already, so go look them out and register an account with any one of your choice and fund your account and so that we can start making money at the end of this class. I wish you a wonderful night rest and goodbye. See you guys tomorrow. And please come early, invite your friends. Good day.